Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is February 15 and we're starting from GBPUSD pair with Jakub Novak. Pound rose on Tuesday amid better than expected labour market report in the UK. However, CPI data in the US was also higher than expected, so dollar strengthened during the US session, causing pound to fall. Ahead is a report on UK inflation, which will be decisive in today's movement of GBPUSD. It might push pound down even more, but if prices are better than expected, some buyers will be ready to buy during the European session without waiting for the US statistics. That being said, a rather serious volatility burst is also likely to happen in the afternoon due to the US retail sales data for January. A higher than a forecasted figure is likely to prompt a further rise in dollar and another drop in pound. Reports on the Empire Manufacturing Index in the change in industrial production will be of little interest. For long positions, you can buy pound when the quote reached 1.2175 and take profit at the price 1.2230. Growth will be possible if there is news of a sharp slowdown of price pressure in the UK. However, when buying, make sure that the MACD line is above zero or is starting to rise from it. Pound can be bought at 1.2140, but the MACD line should be in an oversold area, as only by that will the market reverse to 1.2175 and 1.2230. For short positions, sell pound when the quote reaches 1.2140 and take profit at the price of 1.2080. Pressure will return if the retail sales data in the US exceeds expectations. However, when selling, make sure that the MACD line is below zero or is starting to move down from it. Pound can also be sold at 1.2175, but the MACD line should be in an overbought area, as only by that will the market reverse to 1.2140 and 1.2080. The next in line is Sebastian Seliger with technical analysis of euro-dollar pair. The euro-dollar pair has been seen moving lower after the bounce from the level of 1.0656 had been kept at 50 MA on 4-hour timeframe chart. The high tide candlestick pattern was followed by a bearish engulfing candlestick pattern, and then Moribotsu candle was done as well. The market is in the progress of the A, B, C corrective cycle and now the wave B is being developed. When the corrective cycle is done, the next target for bears is the technical support located at 1.0622. The momentum remains weak and negative, so all bounces are being used by bears to sell the euro for a better price. Please keep an eye on the level of 1.0787 because this is the key short-term technical resistance. How to catch short wave on BTCUSD, Petar Yakimovic describes. BTCUSD has been trading upside, but we found a strong resistance zone on the test at the price of 23,300. Due to the breakout of the bigger trading range and retest of the resistance zone, Petar sees potential for the downside movement. Watch for the potential selling opportunities with the downside objectives at 21,330 and 20,359. MACD oscillator is showing fresh downside reading, which is good sign that we can see downside continuation. Key resistance zone is set at the price of 23,300. The next chapter of our market review is USD GBY focused by Laurie Bailey. On Tuesday, the dollar-yen pair successfully consolidated above the balance and the MACD indicator lines, which is confirmed by an attempt to test the point of intersection of these two indicator lines of the lower shadow of yesterday's candle. The signal line of the Marlin oscillator is trying to turn down, but is still far from the overbought area, so the direction of the oscillator trend is dominant here. The 133.77 target is relevant. A consolidation above this level will open the prospect of growth to the next embedded price channel line, around 137.62. The first signal of the reversal is when the price overcomes the support of the MACD line on the daily chart, 131.35. The target is 130.06. The price is rising above both indicator lines on the 4-hour chart. Marlin is in a green zone. An uptrend in the short term. These could be supported tonight after the release of data on retail sales and industrial production in the United States. Retail sales in January is expected to increase by 1.8%, while industrial production is seen to increase by 0.5%. Here is more proofs for USD GBY bulls by Petar Yakimowicz. Let's have a look. USD GBY has been trading upside, as Petar expected, and the price is getting closer to the first upside objective at 134.55, and Petar sees the potential for further growth. Watch for the potential buying opportunities on the intraday dips with the upside objectives at 134.55 and 137.25. Stochastic oscillator is showing upside reading, which is a sign that buyers are in control. Short-term support is set at 132.70. That's all for today. See you online soon. Good luck.